What's up, you guys? Welcome back to the Average Joe on Money Financial Channel, and in this video we are talking about dividend stocks, but more specifically we are talking about my Robinhood dividend stock portfolio compared to Vanguard's high yield dividend ETF VYM. I actually did a similar video a number of months ago that's actually gotten quite a few views over time, in which I took 5 dividend stocks and compared it to Vanguard's VYM. And from that video I got a lot of good feedback, positive and negative, but it's all very constructive because there were people that had questions or concerns about the stocks that I used and saying things like, well, if you just pick the top 5 stocks, of course you can beat an ETF with a lot more diversity. And so I really want to address some of those issues by actually putting my money where my mouth is and looking at the actual portfolio that I carry, something that you guys can replicate as well. And based on what you see in this video, hopefully you'll understand, based on your own perspective, whether you feel it's best to own your own dividend stocks in a dividend stock portfolio, or if you'd like to just hold a Vanguard high yield dividend ETF VYM. You guys know how I hate long and drawn out videos with lots of BS and clickbait, so let's go ahead and jump right to the content here. Let's jump onto my computer screen and compare my Robinhood dividend portfolio with Vanguard's VYM, their high yield dividend ETF. Let's go. All right, guys, here we're looking at my Robinhood dividend stock portfolio. So I'm going to click over here on accounts, and it's going to pull up my dividend stocks that I hold in my portfolio. And we'll also look at the my Excel spreadsheet as well, which details all of my holdings. And it's got a lot of the data from Vanguard's VYM as well. So just in case you're not aware, Vanguard's VYM is the Vanguard High Dividend Yield ETF. And their goal is to track the performance of the FTSE High Dividend Yield Index, which measures the investment return, blah, 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 blah. Stocks characterized by a high dividend yield. And I'll show you some of the underlying holdings in that fund as well, but we're going to go ahead and compare these stocks in my portfolio on a number of key metrics, including just looking at the portfolio diversity and the diversification that comes with it. We're also going to take a look at the dividend yield. We're going to look at the dividend growth rate in the portfolios, and we'll also look at dividend safety as much as we can. All right, guys, let's go ahead and start first by looking at portfolio diversity. And let's take a look here at Vanguard's VYM. We can see here it's got an expense ratio of 0.06%, and if we go here and click on the portfolio and management, we can see that it's got actually 424 different dividend stocks in this portfolio. And we can see here the top 10 holdings here, and if we look at the top 10, it represents 25.10% of the assets, but I wanted to go a little bit deeper on this one, so I built out part of the VYM portfolio in my Excel spreadsheet. I actually took the opportunity to pull every single one of Vanguard's 424 holdings here. You can see I scroll all the way, hundreds of holdings here. I pulled all of them into my Excel portfolio because I wanted to show you what kind of weightings there were and what different yields were in this portfolio. If we scroll over here, we can see that total assets for the fund, $35.2 billion. That's from their website. And the top 25 holdings, the top 25 represent 47%. So there's 424 holdings, but the top 25 represent 47% of the assets. And if you look at the top 35, which is an exact match to the number of holdings in my portfolio, you can see the top 35 represent 57% of the fund. So not a lot goes to the bottom 375 of these holdings. So 424 holdings, top 35 represent over 50% of the holdings on all the assets in this fund. One thing I noticed between the Vanguard VYM portfolio and my own was that of these 424 holdings in the ETF, 170 of them, 170 of the 424 have not raised their dividends consistently for at least 5 consecutive years. They either are cutting their dividend at some point along the way, or they're keeping it static at the same amount and not raising it. And if we compare Vanguard's VYM stocks to my own, you can see that of my 35 holdings, every single one of them right here listed all these companies here, the number of years consecutively that they have raised their dividend every single year is pretty staggering. All of them, 100% of them raised their dividend for at least 5 consecutive years. Some of them, though, 10 years, 26, 44, 50 consecutive years. All of them have a track record of at least 5 years. Some of them, though, over 50 50 years. Let's go ahead and talk dividend yield here. So I pulled this off of their website, VYM's dividend yield. It's a tab in my Excel spreadsheet. We can see here that the most recent price as of end of business September 18th was $82.52. And I did two different calculations for you guys here. I did a dividend yield based on the trailing 12 months of the last 4 payments received, which is 3 of them here in 2020 and 1 of them the December payment from 2019, which is the trailing 12 months, or just all 4 of the 2019 total payments to show you more of one consecutive years, because the dividend kind of adjusts throughout the year based on how different dividends are paid from the underlying holdings. So from a trailing 12 months perspective, it's 3.48% on the dividend yield, and then 2019 is 3.44%. How does that compare to my Robinhood dividend portfolio? If we look at the dividend yield here, let me click over to my portfolio. Let me scroll all the way over here to the right. You can see here my portfolio has weightings here based off of how much I own. And if we scroll down here, the weighted yield, we go all the way down. My portfolio is yielding 5.31%, and that is based on the actual holdings in my portfolio. 5.31 versus what, 3.44%. They call that one high yield. I say my portfolio is high yield. Let's talk dividend growth rate. And now before we even do that, I want to just admit something here. I kind of butchered the whole dividend growth rate for VYM on the previous video, so I'm going to own that. And I really dug deep here and looked at the actual dividends paid since 2014, I believe. And I looked and I pulled all the data in here. This is from the NASDAQ website. All these payments here are the exact data from the website. And I took all this data based on the consecutive payments, and we looked here at the total dividends paid every single year, and we captured a 1, 3, and 5-year growth rate based on all that data for Vanguard's VYM. We can see here that based on the most recent 5 years, the growth rate on average is 8.3%. This is the compound annual growth rate, or CAGR. For 3 years, we've got 8.81% dividend growth, and then for the last year, 7.29%. So we are trending a little bit down here, and that's not terrible dividend growth, but maybe we can do better than that. Let's take a look at the dividend growth rate in my portfolio, which is something I've really had an intentional focus on. So if we click over here, we can see here, let me actually scroll over here and go up. Based on my portfolio here, we've got the dividend growth rate 1, 3, 5, and 10 years, if applicable. And I've got some cells here hidden, which is actually the weighting based on each holding. So I didn't want to give one dividend growth rate for one stock a higher weighting than it's actually in my portfolio. So all of these dividend growth rates are factored into a weighted average based on how big that holding is in my portfolio. So let me just hide that for now. And we scroll down here. On average for the entire portfolio, again, 35 different stocks, my 1-year growth rate is 16.89%. That is over double what it is for Vanguard's VYM. The 3-year growth rate is 17.29%. And my 5-year growth rate, 20.19%. So yeah, Vanguard doesn't have a terrible growth rate at 8%, 7%, but it gets blown away by my portfolio's dividend growth rate at over 16, 17%. Let's go ahead and talk a little bit about dividend safety now. Now, it can be kind of difficult to capture the safety issues potentially with a Vanguard high yield dividend ETF because there's so many different holdings, and that makes it obviously safer than owning individual stocks because individual stocks could still stop paying their dividend. But if we look here, we can see we're going to look at dividend payout ratio, but not based off of net income. Free cash flow instead, because dividends are not paid with net income, they're paid with free cash flow, which is the amount of profit left over after they've invested back into the business to grow it. In my own portfolio, it's very easy for me to look at the dividend payout ratio issues because I've got the dividend payout ratio mapped out for every single holding I have. And nothing is above, I think, 70% here. Actually, we've got 77% with national health investors, but going above 75%, which is generally my rule, is okay with a REIT or a master limited partnership because they do have to pay out all of their profits, or at least 90% of it, to shareholders. So most of them, though, are below 70%, some of them as low as 6% or 11% and 13%. In other words, looking at my 35 holdings, I'm not concerned that any single one of them is is going to have a dividend cut anytime soon. So these are the exact holdings in Vanguard's VYM, and we can see here, it's hard to calculate the dividend payout ratio based on free cash flow, but I did pull in some of the data directly from the other parts of the spreadsheet, and I calculated a few of the higher weighted ones, but you can see here, some of them have a payout ratio based on free cash flow that is actually really great, like Johnson & Johnson, Procter & Gamble, Verizon, Merck, AT&T, all have pretty excellent dividend payout ratios based on free cash flow. But some of them are not so good, like JP Morgan Chase has negative free cash flow. And we've got Pfizer that's high on their free cash flow or on the dividend payout ratio. We got negative for Bank of America, 88% for Pepsi, 84% for Coca-Cola, and ExxonMobil 178%. So some of these stocks here are in danger of getting their dividend cut in the future. And if you have a leading indicator such as that dividend payout ratio based on free cash flow, it helps you understand which dividend stocks might be close to getting their dividend cut in the future. And you can also see, based on the yellow highlights, some of the stocks that I own, most of them actually are part of this index, though again only 35 out of 424. So from a portfolio diversification perspective, it's pretty much a tie, though you could say because you have 424 holdings that Vanguard's VYM is better from a diversity perspective. But from a dividend yield perspective, I blow this VYM portfolio out of the water. From a dividend growth rate perspective, I absolutely outperform the high yield dividend ETF. And then from a safety perspective, again, we don't own stocks that have a really high dividend payout ratio, even though Vanguard kind of has to because they're trying to match the index. So ultimately, guys, you can actually perform pretty well, successful with the Vanguard High Yield Dividend ETF, but that does not mean that has to be your only option. You can also pick quality dividend stocks in a Robinhood dividend portfolio that can outperform dividend ETFs out there. And the great news about the dividend growth rate in my own portfolio is that it's also going to increase my income by the same amount, which is a big priority for me. That's all I got for you guys in this video. Wanted to just compare my portfolio versus Vanguard's VYM, and I think based on all the metrics we talked about, that Vanguard just not as good as my portfolio when it comes to actual income being earned, as well as the growth of that dividend over time. Make sure to leave me your 2 cents in the comments below. If you haven't done it yet, make sure you hit the subscribe button and click on the notification bell. That's all I got for you guys. Have a great rest of your day, and please continue to stay healthy both physically and financially. Have a good one.